Welcome to another episode of the Scottish Property Podcast. My name's Nick Ponte. I'm here with Stephen Clark. How you doing, Stephen?
Good man, how's things?
Yes, all good. We had Noreen Baqir on from Circle Finance. So Noreen's a mortgage broker based in Glasgow. She's had her business going for about 5 or 6 years now. And she came on, talked about her sort of journey in property, how she's built up a portfolio of around about 40 properties, stemming back to when originally she got interest in property through her family. Her dad had a couple of properties, then she was an estate agent, then she took time out to be a mum and have her family, and then back into the property industry again as a mortgage broker. So it was quite interesting just hearing about her
Yeah, you
story.
forgot about the Subway franchise as well, Nick. You did. That was quite interesting as well.
Exactly. So we covered a lot of subjects there. We talked about the current market, rising mortgage interest rates. Of course, we touched on as well. And Noreen kind of gave her tips on, if you're new to this and how best to proceed with mortgage applications and things like that. So hope you enjoy the content, guys, and the interview with Noreen. And we'll just cut straight to the interview.
Thank you for joining us on the Scottish Property Podcast, Noreen Baqir from Circle Finance.
Thanks, Stephen. How are you?
Good, delighted to have you. And as always, joined by Nick Ponte here.
Thanks for joining us, Noreen. I says to you right from the start, I says, I recognise your face. And like we talked about there, we both started off our businesses in the Village Hotel. And now you've obviously
Starbucks coffee.
On the Starbucks. Now you're saving a fortune on the Starbucks. You've got your own office space, paying for that office probably. So yeah, it's great to see you. You're probably one step ahead of me. I've still not got the office, but I'm not really going to the Village much these days. But yeah, let us know. Obviously, I used to see you sitting working there, so you're obviously hustling away at something. So let us know what you're up to in those early days.
Absolutely. We all have to start from somewhere. So Village was the place where I had all my meetings and I basically worked from. Sat there throughout the day with my Starbucks and just looking for clients. No, working on Circle Finance. So we work on mortgage applications, etc. So it was just really meet clients and working and doing a bit of networking.
And what did you do before that, Noreen? What did you start
gosh.
with? You've got quite a bit of property experience as well, haven't you?
Yes, I do. So initially, I have started off with a financial services background. From there, went into banking. From the banking sector, went into estate agency, and just before the crash, got rid of it. Had babies, as you do, and while they were getting older, opened up a couple of Subway franchises. And they got my kids at school, and I realised that really wasn't my game. So set up Circle Finance, resat my exams, etc., and basically set up Circle Finance.
Nice. Did you sell the Subway franchises?
One we sold up before, and then the other one because one of the food business, if you're not in it yourself, then it does. I couldn't run it myself. So sold it, couldn't give it time and energy.
Because of the amount of staff you have to put in place to replace you. It
was constant, yeah. The staff turnover was crazy. And I always feel like in a food franchise or any kind of food business, that if you're the owners or a really good manager's not in there, then the standards drop.
Mm-hmm. No, it makes sense.
To run.
So how long did you have that for before you sold up? A few years?
I think at least 5 or 6.
I'm quite interested in the franchise model, particularly Subways, because we've never had anyone that's ventured into that space on the pod.
How does that work? Presumably, you need to put out a fee to get started. They provide you with all the setup and all the rest of it. Is it quite a big cost to get?
Especially now, I personally wouldn't recommend it, but it is quite costly. At that point, Subway was newish. So. Yeah, now it's like in every corner, but it's like every franchise. There is a cost, of course. You have your own running costs, but then you also have the loyalties, etc. that you pay as well. It really depends. I would never go back to it.
Mm-hmm. That's good. And take us back to the start when you've got your own property portfolio as well that you built up during this time working in the banking sector and doing the franchise business.
Yes, so I my dad was always into property, so I was kind of like born into it. where I used to do his leases, etc. At a very young age. I was bribed too. But then when I had the estate agent franchise, I obviously got into property then. That's where my love for properties kind of got bigger, and the passion was there. I bought a few then myself and just been running that. So that was what, 2007? So I would say I personally got into it then.
Probably at the worst time then.
No, just before the crash. It was actually the best time. No. Well, yeah, it was just after the crash. So a bit of both. I was in the game, so let's just say I knew the ones that were good to buy.
And have you still got them in your portfolio?
I do. Some I did get rid of. From then I got rid of quite a few. I kept sort of the Glasgow West End ones. They're going great. But since then, especially over COVID, we have probably purchased over 30, 40 properties in about 2 years.
Wow. That's some...
Great.
Yeah, I mean, that's something else. I mean, let's so these existing properties that you kept, are they like, how did you have you got mortgages on all of them? Like, are they debted? Like, how?
Well, they were bought at very, very low costs then. They were mortgaged then, but now they're not mortgaged, no. Some, like the Glasgow West End ones, etc., as you know, the property value is quite high in them. So I have remortgaged them and pulled out equity just to put back in to my portfolio and purchase more.
And you know, like back at that time, there wasn't really any social media, there was no Facebook, there was no property courses, YouTube videos, and all the rest of it. So did you not really have like a strategy as such? Was it more from your family and kind of like your dad and stuff like that just kind of it got passed down? The kind of, you know, property is a good thing to invest in. Let's just keep going with this.
Yeah, that's basically it. It was basically it. So my dad and my family, but we're all like sort of self-employed entrepreneurs. But my dad did have a property portfolio, and I think it was just seeing it. And my dad was very hands-on, so going into the properties with him over the weekend to go and gut a kitchen out was normal. So I think we were just born in it. So it was like you saw that this is definitely where the money can be. So yeah.
Have you got brothers and sisters as well?
I've got two brothers. Yeah.
So are they involved in it as well in the property?
They are probably not as much as I am, but yeah, a wee bit. They kind of a wee bit paddle into it a little bit.
Right. So we'll just take you through that then. So kind of you started off as an estate agent, and that obviously, did that bring you opportunities then to get kind of good deals and stuff like that? Or, you know, you said you bought them at really good prices, but I'm thinking 2007, that was when things were going.
So do you know what? I sold the estate agency in 2007. I've got my dates mixed up. I sold the estate agency in 2007. I had Idris, my eldest, just at the start of 2008. So yeah, so I had purchased. So I think I got rid of the estate agency just in time, which was good. So it was. I'll give that credit to my Idris, to my eldest.
Did you sell it, or did you just kind of give it up, or? I
sold it. I sold because it was a franchise.
What was which one was it?
It was Remax. It was big in the days.
was that? I mean, was there not like, so because Remax was huge at that time, and then all of a sudden when it hit that 2008, it just seemed to just collapse, didn't it?
It did. Completely died.
They're hardly around in Fife area, and I think there's quite a lot of them pop up. But what I think they do is they branch out and start their own independent estate agents after they get their knowledge, experience, and track record in the estate agency.
That's exactly it.
So you basically timed that perfect. So you actually came out with a bit of cash from that business, and then you watched it.
Cash or a bit of break even. I could have been a lot worse. That's what I'm saying.
Okay.
Yeah. Then I watched it crash.
Then you watched it, and you were like,
"Oh my god!" Yeah, exactly.
So what were you thinking at that point then? Obviously, your focus was to bring up your eldest child. How many kids have you got?
2 boys.
Right. So you're obviously you're a new mum at that point. You know what you're thinking when you see all that craziness happening in the property sector and the big crash and all that. What's going through your head? Are you just I'm sitting out just now? How financially? How were you?
I don't think it really affected me financially, even though there were a couple of properties that we owned at that point. They were tenanted. didn't really think too much into the whole valuations of them dropping, etc., because they weren't expensive properties in the first place. So the debt on them weren't too high anyway. I think at that point, to be honest with you, I was just looking after the kids.
Are you married? Are you married at this time? Have you got
yes,
a partner?
Yes. Yep. We were married. I was married, and he was in the IT game at that point. So yeah.
Right. So you had that kind of support from him as well. So there is income coming in there, aye.
Yep.
Yeah. Good.
And did you continue to grow the portfolio when the kids were young, or take a break?
No, I kind of stopped. My dad's, I was managing my dad's mostly at that point. A few of the ones I had managed my dad's. I didn't really purchase. Did I maybe purchase another one or two at the most? I was kind of out the game. I just had whatever I had, my dad had, just managed them.
And this is when you started venturing into the financial services?
No. So I probably was completely out the game for about 5 years until the kids started school. So I'll say 6 years. So yeah, 5-6 years, and then I was a little bit lost actually, because I had kind of walked away from financial services completely. And then just one day thought, let's go and sit my exams and see what I can do again.
How is that when you decide? I mean, when you say doing junior exams, what is it you need to do to be a kind of a mortgage broker and advise people on mortgages?
CMAP exams for definite, and then obviously your knowledge is next to none because you've not been doing anything. So the kids were at school, and I just found out some sort of crash course type thing. I went and sat the 3 exams.
And how long does that take? Can anyone do this? Like,
if you really want to, yes. How long does it take? I mean, I don't want to blow my own trumpet, but I did all my 3 exams and sat all my exams, passed them within like 2 months.
Awesome. That's because you're very smart, of course. So
of course. I mean, not everyone can do that. No, I think it's more of determination. I think I was trying to prove to myself that, hey, I can still do this.
Yeah. And then from there, did you go into a job or a role in financial services before you started the brokerage?
From there, I started working with a firm under a network. As you have to have X amount of experience before you can kind of go and venture on your own. So I did that for about, I can't remember, my time's all over the place. So I'll say about 1.5 years.
And is that doing mortgages, arranging mortgages for people? Yeah, mortgage broker. What was it about that really kind of appealed to you? To go and do that?
When I was in the bank, because I did financial services degree, and when I was in the bank, I had always sort of thought I'll finish off because I had one more exam that I had to sit for mortgages at that point. That I'll do it, and then I never ever got around to it. And I think the estate agency, the properties, as much as I loved them, it wasn't enough. So I think I wanted to start with the financial side of it as well.
What do you mean it wasn't enough? It wasn't fulfilling you? It wasn't making you happy? Like what
No, I love the properties, but see, having the whole sort of journey, sourcing a property, finding it, getting a good deal, whatever, and then getting it financed, and then from there leasing it out or whatever. Yeah.
But why did you not go back to estate agency and go down the mortgage broker route?
Why did I not just go back to the estate agency?
I mean, obviously you had all that experience in a estate agency, but you decided to be a mortgage broker. So
yeah, I don't. So as much as I love properties. However, I don't want to be selling properties. I think it's more of going out there and finding what properties are a good sort of deal. What are a good investment? That's different from actually just selling properties.
Okay. No, it makes sense. I mean, obviously, so you start with a mortgage broker company, but like, did you quickly realize that you wanted to be your own boss? Like, where did it become your decision to branch out by yourself, and why did you make that choice?
I think of so even when I was doing the estate agency, because it's a franchise, I was my own boss anyway.
Right.
So once you've kind of done that, it's quite difficult to get work for someone. And when I did my mortgage exams, I had to work with the firm, then I knew I wouldn't stay there forever. It was literally just to get experience enough to go out and venture out. Yeah. And then from there, it was just Circle Finance basically was born.
Circle Finance was born, which was obviously, you know, your idea, and it's just you at this point, is it? When you started out? Yeah. So just you. And how do you go about obviously starting out from scratch again? Because presumably, you know, you're quite new. How did you get your initial clients then?
So when I was with this firm, I started doing a lot of networking. I think networking is key regardless of what sector you're in. Started doing just a lot of networking. So when I got into Circle Finance, I'm not going to say that the business was there, but I had met a lot of people. So I had the odd end client I could have started off with. And since then, it's grown a lot. So it was networking for clients, it's networking for people that could refer business, like insurance firms. That's probably where I started off as well. There was a insurance broker in Fife. I had known them over the years, and they were getting a lot of sort of mortgage inquiries, etc. as well. So they just started passing business on, and from there it was just like, you know, making them connections with accountants, etc.
And what sort of things were you doing in terms of networking? Were you going to these networking events, or did you join like a networking group? Or
it was any event that was out there, I was there. Basically, at that point, it was like constant networking events. Some of them I walked away going, "Gosh, that was such a waste of time." But anyone there, it was there.
So I speak to a lot of people who hate networking and they can't bring themselves out, and they just, you know, they're quite introverted and stuff like that. But I presume that wasn't you. You seem quite confident and chatty. Did you find that quite easy to throw yourself into these kind of rooms?
It is pretty difficult at the start when you've not kind of been doing it for a while. But once you sort of start finding your feet, I think the key is, see, once you have confidence in yourself, that's it. You can sell anything to anyone.
And how when you started the brokerage, what did you look at specialising in a certain type of mortgages? Was it just residential mortgages? Was it buy to let, or, you know, short-term development?
So when Circle Finance started, it was literally just started, let's just see what we can get, what can I get, and take it from there. So it probably started off with residential, and then I got a couple of buy to let clients. From there, it was just really a word of mouth. And what I noticed with the buy to let clients, obviously they're always purchasing, they're always investing, so it was more loyalty from them and word of mouth from them to other investors. And I think that's where I probably really pushed into just before COVID or just during COVID. So this is probably COVID was second year, so this is the third year that I have been really pushing into investment properties and buy to let mortgages, specialised finance. So I hardly do residential now.
Right, okay. So quite a focus on that. So I'm interested then about this growth in your own portfolio. You've said that you've purchased how many properties since COVID?
So over COVID, there's been approximately about 30 properties that are purchased with ourselves and a business partner.
So why all of a sudden, like, you pretty much sat out and didn't really buy anything for years and years and years, then COVID comes about, you're like, I'm buying 30 properties. What changed?
Boredom. No. It was always in the blood. It just had to surface up again. And with COVID, there were so many opportunities. Why would you not purchase? At that point, there was so much. We were all working from home, and I think we were all a bit, oh gosh, what's happening? Especially with myself, what's going to happen? What's happening? Is the property market even going to be a thing? Mortgages, is there going to be business out there? And I've always had a sort of habit of just, for the hell of it, going on to Rightmove and etc., and just seeing what's out there. And that's what I did. And then from there, I was just sending out inquiries to the estate agents. And I mean, we purchased a lot of properties without viewing them over COVID. It was great.
Right. And are you targeting any specific areas? Like where?
So majority of the properties are sort of within Lanarkshire.
Because you stay in Motherwell, didn't you? North Lanarkshire. Yeah. So you're kind of looking around these areas. Yeah. And did you said you've met somebody who you're investing with? Is that like just like somebody you've teamed up with as a business partner, or is this another family member?
Yep. So, yep. There is another business partner involved in this. I think it was just one of those things where we were purchasing on, you know, that way where you start purchasing in private, your own name, and then you've got another family member that's purchasing as well. Then you're like, let's just do a limited company. Let's just see what we can do. So there's a few limited companies set up, and just depending on what the properties are and how they get purchased.
And where's all your cash coming from then to buy these 30 properties?
They are, majority of them are all financed, but it's really just having the deposit, isn't it? Let's be honest.
So has this been built up from your business then? Have you been kind of putting the cash aside from Circle Finance to then invest in property? Or
So this has been built up probably over the years, and the properties that were owned for numerous years no longer had finance on them, so it was basically just refinancing them to pull out the funds from there to deposit new ones.
So, and what type of properties are you going for then? What sort of profile, like flats, houses?
Things have slightly changed now. However, it was a mixture of flats and houses, 2-bedroom, sort of. It wasn't, again, in the higher bracket. It was sort of 60,000 upwards.
Okay.
2-bedroom just to rent out.
And is all that portfolio is going well? Like, have you got good tenants in there? Do you have a letting agent? How's that going in terms of the management of it?
Yep. So they're all let out, thankfully. Yep, and there's a letting agent involved as well. Not in all of them, but most of them.
So as a business owner, you don't have time really to be running about looking after tenants and managing maintenance and repairs, do you? So you've obviously outsourced that.
Yep. Majority of them are outsourced, but some of them aren't. I think we've started getting our own sort of tenants in as well, just because the word gets out, this number, they always have properties, call this number type thing. So because we've got the staff anyway, the admin staff, so it's kind of just dealt with.
And what's the plan in that portfolio? Noreen? Is that plan to continue to grow that portfolio now, or has it changed now with the more recent changes?
It's not going to stop. There will be more properties purchased. However, it's a little bit more cautious now. I think first quarter will definitely be quieting down, simply because like the properties that were purchased end of the year last year took a long time for all the finances and everything to get completed and finalized. So that's just happening now. So they'll be coming, the properties will be getting added on to the portfolio like this month, tenanted, etc. So we'll probably not purchase much in the first quarter for definite.
Did you say you're taking your time with finances there? Sure, this should be our forte. This should work really quick.
Sorry, I missed that.
Sorry, did you say the finance was slow on these purchases?
Unfortunately, just because of the economy. Liz Truss had a little bit of impact on that one.
How does that work?
If anyone had a good systems in place for getting the finances, it should be you.
Remember, absolutely,
but even you did struggle. That's good to know.
Yes. I think we all struggled. It was just lenders. Lenders became very, very cautious, and everything just became a slow process.
I've often wondered this because I know a couple of people who invest in property who are mortgage brokers. But can you arrange your own mortgages, or do you have to use somebody else for that?
A bit of both. You can use most of them are used somebody else, but again, it really depends on how the properties are purchased, limited companies and whose name, etc.
And how you getting on? Because I've heard some people, like, obviously if you have that growth over a short period of time, lenders, it can sometimes be difficult. So is there any specific lenders that you've been going to, or do you just kind of like go with whoever?
The Mortgage Works gets quite a bit, and the mortgage lender, their rates are a little high. However, the job gets done.
But with the Mortgage Works, I think it's like a 10 maximum or something, isn't it?
Yeah. 10's the different ways of purchasing them.
10. All right, okay. 10 maybe different companies, right?
Then you've got, the mortgage lender gets a lot of the business. And now we've started using Paragon quite a bit as well.
Got you. Right. Okay. So that's some good names for people to think about there. And
The only name people need is Circle Finance.
we'll come to that, and we'll give you a good plug at the end. But I think it's great how you've grown this sort of portfolio, and obviously, what is the kind of long-term plan behind this? Is this something for you to fund late? Is this portfolio? Are you taking cash out just now? Or are you just letting the money kind of accumulate? Are you going to reinvest that in more properties, or is it very much a long-term play?
Yeah, definitely. It's going to last. Definitely. I know the market is a little bit all over the place, and everyone's, landlords are hated by the government, etc. However, if you're in it for the long haul, I definitely think it's worthwhile. And mine will be growing, not going anywhere.
Good. And Circle Finance then. So obviously, what have been the main challenges? Obviously, you mentioned Liz Truss and all that carry on. So the mini budget obviously had a big impact on mortgage lending, mortgage interest rates and all that. So how are you placing? How did you deal with all that? And have you come out of that period quite well?
To be honest with you, it's probably a really busy period because everyone was so uncertain. It wasn't as bad as what the negative was, but the media was portraying it anyway. The media was just completely negative. The clients I have are portfolio landlords, long-term investors. Yes, they were on the phone, totally what's going on, what's happening. However, majority are in 2 years fixed rates, 5 years of fixed rates. So it didn't affect everyone straight away. Slowly it will affect people. But we'll just deal with it then.
So the questions at the moment, obviously we're reading just now that there's actually the mortgage rates are on the decline. Mortgage rates are going down because there's this kind of like, in the residential space especially, the kind of like transactions are lower. So there's less business for mortgage lenders, which means increased competition, which obviously means that they're driving their rates down. We haven't really seen that too much from what I read. You'll be able to tell us better. In terms of like the buy-to-let limited company mortgages, the rates don't really seem to be going down as fast. Why is that, and will we see that?
I hope so, but you're right. The residential interest rates are coming down far more than the buy-to-let ones. The buy-to-let ones, I don't see them rising, if that's a good thing. I think lenders are a bit more cautious as well. And also, not only are their rates not coming down, but the values that they're accepting for buy-to-lets are quite high as well now. So they're basically just looking for less business, but more quality business. But it's just a matter of time. Again, I say the first quarter, because they're going to have all this money that they're not going to have all this money to lend that they've not been able to basically, and they've got a business to run as well. The BDMs I speak to, they've got targets, etc., and they're not meeting them simply because the valuation figures are too high, the property price, the ones that they're accepting are too high. So they're not as busy. So I was speaking to a BDM the other day, and they were saying, no, we were doing approximately on a minimum 75, 80 applications a day. We're down to less than 20. That's a big, big drop.
Well, that's interesting, because we obviously read stats about mortgage application, mortgage approvals being down. Will that obviously have an effect on the property market in general? And, will prices come down? What's your kind of view on how the market will go in 2023? We hear kind of reports of, a crash or minus 10%. Where are you sitting with your predictions?
We're not going to have a property crash. I think I was the one that was jumping up and down when all this Liz Truss stuff was happening. And I was like, no, stop, calm down, everyone. We're not going to have a property crash like we had in 2008. Mm-hmm. I just hope these words don't come back and bite me, but no, we're not. The lenders it's all regulated now. So, everything is completely different than what it was in 2008. Yes, the properties are going to come down. However, the property prices have actually risen so much in the first place over COVID, etc. as well. So before you're paying so much over valuation report. Residential properties were going insane. They were going 40, 50,000 pound over valuation report. So they were selling for too high anyway, and that has to come down. It has to settle. So I think at this point we're at sort of home report. They're selling at home report valuations. Are they going to come down? They probably will come down maximum, I'd say about 10%, but nothing major.
Mm-hmm. A question for you when you're doing like refinances and you know, when obviously you're trying to get the maximum out of, you know, some people might do a strategy where they increase the value through a renovation, then they're trying to pull as much money out of it as possible. That's quite a common thing for people to do. I've always wondered, like, is it worth just trying to go high on the valuation just to chance your luck almost? Or, you know, is that just ultimately going to backfire on you once the lender sends out their own surveyor? Like, what have you seen? Have you seen people getting downvalued lately?
The amount of people that you speak, like investors that I am talking to, I'm like, right, okay, so how much do you think the property is worth? X amount. So I'll have a look I'll do my own research a little bit. I'm like, really? Okay. There's no point in me doing all the work and then, okay, we'll chance it. But the lender will send out their valuers and it does come back lower.
Right.
So you can chance it, but it doesn't get far.
And as a mortgage broker, that's not really your job, is it, to sort of advise on the valuation figure, is it? Do you just put down what the client says and then obviously?
Again, it depends on the client. I work very closely with my investor clients. So I tend to do kind of extra. I will kind of look at the valuations, etc. at that point. But otherwise, no, we don't do that. It's not our job.
And where do you feel that, obviously there's like, you know, hundreds of mortgage brokers out there, where do you feel that you can you've got the edge over other ones and you feel you deliver a better service then?
You know, I think I'm going to focus on investments and buy to lets more than residential, because that's where the Circle Finance focuses on as well. I'm in the game. I do it for myself. I do it as a living. So would I advise a client otherwise? Would I advise them negatively? Or when I talk to a client, I would tell them to do what I would do. I wouldn't advise any other way, basically. So I think it's more passion again, because I'm in the game myself.
You've got an understanding there of what people are trying to do.
Definitely. And it's a knowledge. It's a knowledge. If you're in there doing it yourself, you have that extra bit of knowledge because you have your own sort of experiences as well.
Mm-hmm. Talk to me about, like, why is it so difficult when you're doing things through a limited company and all that, when they come back to you with all these things that you need to, like, all these, like, surely there must be a better process? Because what I found lately on the limited company mortgages that I've been putting in, they keep coming back to you like again and again and again, and it's dragging on. Why can they not just right from the start just give you a full checklist? You know, like,
that would be too easy. No, I totally get it. But at the moment, I think that's happening just overall because of how the market is. I'm going to go back to like an application I just did for Paragon, and it was for one client, limited company, but there was 6 properties, so it was 6 different applications as such, and it went on forever. They asked for anything, everything, business plans and everything. But I think I think the lenders are a lot more cautious at the moment, so they are asking. I don't mind it, because you know what? As long as you get the mortgage at the end of it, it's fine. But that's where you need that's where you need a good broker, Nick, honestly, because it takes the stress out for the client. It's like when the lender asks me for a business plan, etc. I'm not going to turn around and go to my client, right, set me a business plan up. I'm like, come on, seriously, is he really going to do that?
Yeah, so that's one thing I've always struggled with, like business plan projections. I'm like, what? Are you serious? Like, what?
You touched on Paragon there, Noreen. I noticed this morning that Paragon released a good lot of new products, and some of them were going down to, I think it was a 2-year fixture, like 4.8. I think the 5-year, which they weren't introducing, the 5-year fixture, they're at like 5%. So it's weird that they're the base rate's going up, but the lenders are now bringing their rates back down. Is this because they're trying to get that money out now?
Well, yes and no. If you remember correctly, when the whole chaos happened, all lenders pulled out all their products, right? And then they came back with crazy rates. So they had already factored in for the base rate to basically come up to, what was it, estimated 5%, but we're at 4%. So they've already factored in more for the base rate to go higher than what it actually is. So they can afford to bring it down. But I personally think it is, of course, to do with the business that they're not getting as well. Hence the reason second quarter, I think we'll see much better results.
Yeah, because I mean, Paragon put in a 5-year fixed at 5%, only 1% above base rate. It's quite nuts. Does that mean they're predicting that the base rate is going to come back down over that 5 years? There's not much margin for them.
Yeah, maybe so. They most likely are. I don't. Yeah, they've got other fees as well within. So the lender's never not going to make money. But at the same time, they've got basically business that they have to bring in as well to make money themselves. So yeah, they have to make competitive results.
I found a real little victory in kind of getting one up Halifax, porting my mortgage over. My 1.4% mortgage I fixed for 5 years on my residential house, and it just came up the year, like a few months ago, and I was moving house, and they tried everything not to let me port it over to the new house for the remaining 4 years. And I got over, I was like, fucking you beauty.
Oh, fantastic. That's like winning the lottery. Great. I mean,
it probably means not much over the course of the
no, but still, come on, just thinking about the 1% to like a 3-4% rate, fantastic.
Just felt like that a little bit when I was like, oh, great.
Definitely.
This is where like people are really going to get hit, isn't it? When these fixed rate and they go from 1.6 up to like 5%.
Honestly, it's crazy. Yeah, especially for like residential people with the residential mortgages, etc. Because bread and butter, isn't it?
Yeah, let me know.
Like your clients, like factor in like the new ones that are they're coming up with their own buy-to-let portfolio. Their fixed rates are ending. Are they going for trackers or a short-term tracker to ride out, or they're trying to fix it for longer just to know where they stand, or how are you feeling or where are you advising your clients to go with it?
I'm not advising. Obviously, every case is different, and at the end of the day, it's client's choice. But I personally wouldn't advise, and I wouldn't take it myself as a 5 years fix. I would never take a 5 years fix at the moment. Rates are too high. 2 years fixed some of them are quite good and quite competitive. Trackers, they're okay as well, but I think some of the 2 years fixed are quite okay. So I would, again, it depends on every situation, but I think we would probably just go for the 2 years fixed.
That's what I'm doing at the moment. I've got a couple that have just come up, so
devil's advocate here, Noreen, and it's something I thought about a few months ago, because we fixed a whole lot of mortgages, obviously at 2 years. You know, I think about 2.7, a lot of them at Paragon, the last couple of years. They're all coming up this year. And I'm thinking, fuck me, my broker, convinced me to fix it for 2 years over the 5 years, because they get a refinance every couple of years. And I'm like, shit, if I fixed it for 5 years, I would have been a whole lot better off.
Totally.
And I know it's in hindsight and stuff, but
don't get me wrong, I have fixed a lot of mortgages for 5 years fixed before all this. I just wouldn't do 5 years fixed at this point.
Just with uncertainty.
Yeah, because of the uncertainty, and the rates are higher. I think that we'll give it a couple of years. We're going to see a lot more settling down. 2 years, 2.5 years. So I think if you've fixed for 5 years, you've got about 2 years of a higher rate you're going to pay after that.
Sorry, Stephen.
I suppose, like, that Paragon one that just came out today, the 5 year fixed at 5%. It's only 1% above base.
No, that's fantastic. That's fantastic.
There's probably fees to that, though, you might find.
Yeah. Before I could say, I would use it, I wouldn't use it. There will be fees, etc. Yeah. I think it just has to all be balanced out.
Is that something you do when you're looking at your buy-to-let clients as well? Do you factor in over that period, like the total cost of the borrow over that 5 year, the 2 year, and compare the two, and get a bigger understanding of it, rather than
it's more than just the monthly cost, isn't it? Because we're running a business. Mm-hmm. It's not like a residential where this is, we're going to have this for 20 years, or if we win a letter, we're going to pay off earlier, but we're going to have this for 20 years. This is our home. But we're running a business. So regardless of how much you pay per month, you're looking at in 2 years' time, is this going to cost me X amount to refinance, or is this, the fees, etc., the valuation fees, the solicitor fees, all that has to come into it, because you want to make money. So there's no point in making X amount every month, but in 2 years' time having to fork out X amount again, and that kind of balances it out, and you've not really made much at all.
Question, here a question for you, right? So I'm looking at a couple of properties at the moment as a cash buyer. If I buy cash and I do the renovations very quickly, and I'm wanting to then get a mortgage on it, at what point, like how quickly could I start that process of getting the mortgage on it?
So there is a lot of lenders that will want you to own the property for 6 months. But there are a few properties in the game as well that'll take first day remortgage. But you should look at bridging.
Possible bridging would be an option. Right, okay.
Yeah. Why use your own money?
Right, okay, good. I mean, that's something that we could maybe do another episode on, but I think that's pretty good. And just for the listeners who are new starting out as well, they always want to know, how can I stand myself the best chance of this process going smoothly and ultimately getting accepted for the loan at the end of the day. So what are the top 3 tips, obviously, for a new client coming to you? How should they be positioning themselves so they stand the best possible chance of things going smooth?
Are we taking this into the investment side, or
buy to let? Yeah, company mortgages.
Basically, speak to your accountant or tax advisor first, because higher rate taxpayer, lower rate taxpayer, everyone has their own different taxes that they're paying. Then figure out what way you want to go, whether you want to go in your personal name or limited company. Both have pros and cons. And once you have, find out what your business model is. Do you want a repayment mortgage? You want to go in interest only? So know what you want, and then from there, have your finances in order and have a good credit report, have a good credit rate. It's so difficult when clients come to you and their credit report's not very good, because then you're looking at adverse lending. But if you're trying to make money from investments, then adverse lenders have really, really high rates, and sometimes it's just not worth it.
Yeah.
So just have
and
everything
what
in
tips
order.
would you give to the people starting out?
Say that again, sorry.
And what tips would you give to people starting out to improve their rating?
Right. Firstly, download your credit report. Go on to Experian or Expedia, find out what your report is. If you don't have a lot of credit in the first place, then get a bit of credit. I'm assuming if you're buying investment properties, you've already got a mortgage, etc. Don't miss out. Don't miss any payments, especially on a secured finance, because your chances are next to none to get any mortgages for about 2 years then. So it would just pay everything in time and just don't have outstanding debt if you don't have to. Like, don't have that credit card at £3,000 for the hell of it. Just pay it back every month.
Yeah, as credit utilage, is it called? Is that important to have that percentage low?
Yeah, because every individual will have an X amount of credit before the credit rates, etc., starts to drop. Yes, but then if you're starting out, then yeah, definitely.
Yeah. What about if you've gone out and bought a brand new Porsche? Can that go against you?
Well, it depends on how you bought it. So I'm assuming you bought it in HP, so you've got your monthly. The thing about hire purchase, unfortunately, we have this a lot. You have the monthly repayments, but you've got the balloon payment at the end. So a lot of lenders actually counting that balloon payment as a debt as well, but there are lenders that will dismiss it. So again, it really depends on what route you go down.
The reason I said the utilage one is I kind of discovered this by accident during COVID, because everyone was talking about these mortgage holidays and stuff on the podcast, and I was like, no, avoid them. So I took out like a credit card, an interest-free credit card, and I think I got 14 or 15 grand utilage on it, and I never used it obviously because COVID wasn't as bad as we all panicked and we got in business. But I noticed my credit report started going up, and nothing had changed except for the credit utilage. That the utilization of the credit, it was like so much higher than what was nothing was getting used. So the credit report went up, and I thought, oh, that's quite interesting. If people were really starting out, like you say, get a credit card, put a couple on the
Yeah, definitely. What I would say is get a credit card and, do you know what, fill your car with it and just pay it back at the end of the month.
Makes sense.
Yeah.
Brilliant. Great stuff, Noreen. Thanks very much for taking the time here to chat with us. It's been really good getting to know you. Where can people reach out to you and use your services? How can they get hold of you?
Any Starbucks, I'll be there.
No, the Village Hotel anymore. Though.
No, not the Village
Euro Central.
Euro Central. Yep. So we're based in Euro Central. Circle Finance. We're online. You can find me on LinkedIn under Noreen Baqir, and yeah, I'm everywhere. Find me online. Get in touch. Send me an email. Email address noreen@circle-finance.co.uk, and basically myself or someone will be in touch. We're always happy to help.
Oh, you can tell you're a great networker, Noreen. That was like a BNI pitch there.
I don't do BNI, but I do love networking. Yes.
Thanks so much for taking the time. Really appreciate that, Noreen.
And no problem. Thanks for your time, Stephen. Nick. Thank you.
Thanks.
So, guys, I hope you enjoyed that interview with Noreen Baqir from Circle Finance. I know we did. She's certainly got a diverse life and business and plenty of property experience. So, yeah, guys, if you're liking the podcast, enjoying the content, please share it on social media. Connect with myself and Nick on Instagram, Facebook, LinkedIn, usual platforms.
Excellent. As always, get across to one of our networking events, first Wednesday of the month, and we'd love to see you there. Thanks again for listening, guys. Speak to you next week.